Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra, and today we are talking about humanoid robot ETFs. Robots that look and move like us are no longer science fiction, as rapid advancements in AI and robotics have propelled these machines into everyday life. NVIDIA CEO Jensen Huang has described physical AI as the next wave of AI. He believes that humanoid robots will be in wide use in manufacturing within less than 5 years. And Tesla CEO Elon Musk predicts that humanoid robots will be the biggest product ever, and their demand will be insatiable. After all, who wouldn't want their own personal C3PO or R2D2? Investors now have access to 2 ETFs that are designed to capture this transformative theme. The Roundhill Humanoid Robotics ETF, ticker symbol HUMN, HUMN, and the KraneShares Global Humanoid and Embodied Intelligence ETF, ticker symbol KIOD, KOID. These ETFs provide exposure to companies that are pioneering robots, as well as critical providers of AI sensors and hardware powering this revolution. So in this episode, we'll talk about both these ETFs so that you can learn more about them. My first guest is Dave Maza, CEO at Roundhill Investments. And in the second part, I'll be joined by Derek Yan, Senior Investment Strategist at KraneShares. Joining me now is Dave Maza, CEO at Roundhill Investments. Dave, welcome back to the show. So excited to talk about humanoids.
Yeah, thanks for having me back.
So tell us what inspired Roundhill to launch this ETF.
Well, certainly happy to share sort of what inspired, but maybe it's important just to say, well, what is a humanoid robot? And essentially, it's a bipedal, human-sized machine with a brain powered by AI and dexterous hands that are built to work along humans. And the inspiration is really that because of the advancements in AI, particularly generative AI, coupled with the more powerful semiconductor chips, humanoid robotics, we believe, and the idea behind embodied intelligence is at a moment where it can really begin to take off to help meet the demand that's there for what we call the 3 Ds of work. And that's jobs that are dull, dirty, and dangerous. And humanoid robots can really help with that type of work to fill labor gaps that actually exist in today's economy, even with low unemployment rates.
Excellent. So talk to us a little bit about this ETF.
Yeah, so the Humanoid Robotics ETF is an actively managed ETF. And it's actually managed in a very similar way to our generative AI ETF chat, where we screen the universe to identify areas where humanoid robotics are either being powered from or have actually real world kind of in market or coming to market soon use cases. And so then from there, we use an actively managed process to identify companies that we believe are actually at the forefront of humanoid robotics. So this is a relatively precise, concentrated portfolio to provide exposure to humanoid robotics companies.
So we'll talk a little bit more about the portfolio that you mentioned. It's a concentrated portfolio in a little bit. But before that, I wanted to talk about the market. And I saw a Morgan Stanley report which says that humanoids will be a $5 trillion market, I think by 2050, they said.
Yes.
And they said that in that report, they mentioned that the current cost of a humanoid is about $200,000. in developed countries. So clearly, I'm not getting my R2D2 anytime soon. but yeah, that price tag is, I think, a little bit steep for real world use cases, particularly when we talk about humanoid robots being deployed in commercial or industrial settings. Of course, as the technology improves and we see exponential improvements in all these technologies, so costs will come down over time, and with that, adoption will likely accelerate. So could you walk us through some of the current and potential future real world use cases for these humanoid robots?
Yeah, so you noted that there's estimated by Morgan Stanley to be essentially a $5 trillion runway for the humanoid robotics market. And that's going to be accelerated by the average selling price of humanoid robots coming down significantly from 2024 to 2025. And when we think about these use cases, let's go back to that dull, dirty, and dangerous. So that's really where a robot, particularly a humanoid robot, can actually add significant value to corporations with a large number of use cases. So what is dirty work? Dirty work is, involving toxic chemicals, biological waste, just kind of grimy stuff. So think about cleaning out a sludge tank or handling scrap metals or other kind of toxic metals. Dull work is probably where people think about, or we see humanoid robots being started to be put in place. So that's, things that it's very repetitive and almost mind-numbing. So loading identical boxes during an overnight shift. So think about an Amazon warehouse or something of that nature. Then there's dangerous jobs. So dangerous jobs are high heat, lifting heavy, or potential for acute injury risk. And that's where auto manufacturers are so focused on introducing humanoid robots onto their factory lines to really kind of help with jobs of this nature and fill sort of to reduce some of the potential for not just error, but actually for loss of life from some dangerous jobs that can occur.
So let's talk about the portfolio now. How does HUMN select and score companies for inclusion in this ETF? You mentioned that it is actively managed. So talk to us about the selection process.
Yeah, and so this is where I think the Roundhill Humanoid Robotics ETF is really distinct. And so there's many different approaches to identifying companies that are involved in humanoid robotics, or really any other theme for that matter. But the way this fund is run is that the Roundhill Investment Committee is tasked with identifying the companies that make its way into the portfolio. So we are really seeking to invest in just a handful of company types. So that's companies that are manufacturing humanoid robotics, or are actively developing or producing the critical infrastructure to make humanoid robotics work. So think about sensors and power systems and semiconductor chips in particular. But in order to qualify for the portfolio, the company has to have commercial production. So they already have to be selling humanoid robotics. There are companies in China that have robots in market or be in a prototype state. So think about Tesla and the Optimus robot. And really, we have a proprietary selection methodology that first prioritizes companies with higher levels of what we call thematic relevance. So we're relying on publicly available research, 10Ks, company presentations, capital market stage presentations to identify those names, and then do fundamental research on top of them to really identify the right companies that should be in this particular portfolio.
So talk to us about some of the most innovative companies in this space.
Yeah, well, I think when we think about innovation in humanoid robotics, it's hard not to sort of immediately start thinking about Tesla's Optimus robot. It's become one of the most recognized humanoid robots in the world. Optimus is designed to handle factory tasks, specifically that repetitive or unsafe human workers. Of course, I think it was also fun to see it serving some popcorn recently. But Tesla's already using Optimus as in a prototype fashion in their production lines with a vision to expand to consumer and home applications down the road. And what I think is fascinating is that the same AI backbone that powers its full safe driving capabilities actually is used to train Optimus. Another company that I like to think of, perhaps because the robot is very cute, is UB Tech Robotics. Its robot's called the Walker X. It can pour tea, carry items, interact with facial and voice recognitions, and it's being positioned as a smart home companion. But it has use cases in consumer service roles like hotel reception and retail assistance as well. And then lastly, a robot which has actually been around for some time in different iterations is called Atlas, and it's developed by a company called Boston Dynamics, which is many people may not be aware of, is owned by Hyundai Motors. And so they bought that company in 2021, and this robot can do particularly exciting acrobatics and complex mobility. And so the idea of why Hyundai bought Boston Dynamics is that they believe that this is humanoid robotics is a critical link to its future mobility strategy, linking with autonomous cars and smart logistics. So those are just three examples of robots that are in market or coming to market now that actually have very wide use cases, which is another reason why Morgan Stanley has such a high forecast for the total size of the market.
Yeah, right. Those are some very exciting and very interesting developments. But as far as investing in this theme is concerned, and that is a problem not only with this theme, but many other thematic ETFs as well, particularly those that target a very niche theme, because it is very difficult to find pure play exposure companies because there are simply not enough companies. For example, Optimus is probably going to be Tesla's biggest long-term growth driver. That's what Elon Musk believes. But currently, only a small portion of Tesla's valuation reflects real revenue from Optimus. And also, NVIDIA, we know that its market cap results from very strong demand for its AI chips and software. And it is a provider of key robotics technologies, but the direct revenue from humanoid robot projects for NVIDIA is negligible compared to its overall businesses. So I was interested in your thoughts on investing in these niche areas.
Yeah, well, I think importantly, when I think about an investor purchasing a thematic ETF, they really have a few decisions to make. Is this particular theme going to play out today, tomorrow, or 20 years in the future? We believe that humanoid robotics is a theme that's going to start to play out sort of much sooner than maybe people had anticipated because of the advancements in AI and the work that's being done behind the scenes to sort of bring these to market in a more material fashion. Frankly, because of the labor shortages in the dull, dirty, and dangerous work. And so the way we think about it with humanoid robotics is that what we're intending to do is create a precise portfolio to companies that are either have commercialized or are rapidly expected to commercialize humanoid robots today. And so there's a trade-off between having precision exposure or broad-based exposure, but for a theme that is nascent but has the potential to develop fast, just like we saw with generative AI, we believe that investors over the longer run are better off with kind of a more precise, concentrated portfolio to the theme without a lot of potential filler.
Those are all great points. Now, there are other robotics and AI-focused ETFs in the market available to investors. There are legacy robotics and AI ETFs, and then there's another new ETF which is focused on humanoids. So tell us, how's your ETF different from all other options available to investors?
Well, first and foremost, and this is very similar to actually what we saw with our chat ETF, which is focused on generative AI, is that this is the most precise portfolio. Now, again, as I said, there's trade-offs to doing so. So for investors who really want companies that are at the forefront, the nexus of humanoid robotics, really creating the machines or directly powering the machines, not having exposure to rare earth metals that may be required for that, but aren't really correlated or have their valuations dependent upon the growth of this market, then the human ETF may make the most sense for investors. So while, again, there's a lot of different thematic ETFs that have AI in the name, robotics in the name, the humanoid, the human ETF, HUMN, is going to provide that sort of tip of the spear exposure. The other thing that's really interesting here is that this is a very global portfolio. There's exposure to U.S. companies, of course, Chinese companies, Korean companies, Japanese companies, et cetera, because there is growth in all of those markets. And due to the fact that we may see a bifurcation of Eastern and Western tech, we think this market cannot really be focused just on a single country alone.
Excellent stuff. We'll have to leave it there. But Dave, thank you so much for joining us today and for sharing your insights. Congratulations on the launch.
Thank you for having me.
Joining me now is Derek Yan, Senior Investment Strategist at KraneShares. Derek, thank you for joining us today. Great to have you with us.
Thank you for having me.
So KraneShares recently launched the ETF, the Global Humanoid and Embodied Intelligence ETF with the ticker symbol KIOD. And as the name suggests, it focuses on humanoid robots and embodied AI. So most of us understand that humanoids are robots that look and move like people, like we have seen, videos of Tesla's Optimus. Tell us what is meant by embodied intelligence, how it differs from, traditional robotics or AI, and then also talk about what inspired KraneShares to launch this ETF.
Yeah, sure. Thank you. So, for investor know KraneShares, so we launched artificial intelligence focused ETF about a year ago called AGIX. And we included several large language model company in the private stage, for example, XAI, Anthropic, into the portfolio. So we have done a lot of research on the artificial intelligence space. So recently we noticed that AI is really transitioning from the Gen AI to agentic AI and now physical AI. Just as like a CEO of Jensen Huang mentioned on the GTC conference, that AI and the robotics are probably two most important potential for the firm. And we see that robotic actually has a bigger potential that after AI. Just look at all the tech companies, NVIDIA, Tesla, as you mentioned, Optimus, even Amazon's announcing using humanoid in their warehouses. So all the big tech companies actually betting on this category. Now, the tech companies actually have more money than most government in the world. So if they want to do something, I'm sure this is definitely a big trend that's gonna likely to happen. And look at our world today, right? So we have an aging population, we have a demographic crisis. There's labor shortage across the developed market and also emerging market. So how do we resolve that? We already have a quite decent level of, I think, automation across the factories, but the last mile is really, if you talk to a lot of business owner, there's still a lot of job that's really labor intensive, even just move things around. So that last mile of automation need a solution. So thanks to the breakthrough of everything first hardware, right? So a lot of the hardware companies, especially in the actuator, in the motion control, in the battery technology space, they have been really getting better and better. If you look at those videos for the humanoid, the agility and capability of those humanoid is really breaking through in these years. And also another thing is the AI is really changing the way people really train the robotics. I think previously, most of the robotics is really manufacturing related, single tax, robotic arms were factory driven. But now, like with the AI, like think about like the AI, it's really the large language model. Large language model is really, if you have enough data in the digital world, put those data into the model, it can train the model to be intelligent enough to give output. That can be text, that can be images. But now, when it comes to the physical world, what do we call physical AI? Now you have to really train the model to incorporate the action data. So, for example, like grab a water, like grab a bottle. That's very simple in the language, but like when it comes to the real world, that action is very complicated. If you think about a humanoid, there's a terminology called degree of freedom, means how flexible or how agility their hands, the fingers, the arms can move to a certain position and perform a certain task. Even simple tasks like grab a water is quite complicated. But the AI models now can really incorporate those actions into the training. We have seen that many companies are competing to be the future brain, the future operating system of humanoid. And we've seen this moments likely to happen very quickly, given what happened in the digital world. So we think the kind of like the ChatGPT moment for the humanoid could come sooner than people expected. That's why we launched the KIOD. It's the first U.S. listed humanoid-focused ETF that offer global investor early opportunity to capture this long-term mega trend.
Right. So you mentioned NVIDIA's Jensen. Yeah, he has been talking about physical AI a lot lately. And you mentioned Amazon. And I remember reading an article in the Wall Street Journal recently that Amazon now has over 1 million robots in its facilities. And the company is on the cusp of using more robots than human beings in its warehouses. So that's pretty interesting. So tell us, what are some of the real world use cases for humanoid robots? Are these mostly being used in factories and warehouses? Because I understand that currently they cost quite a lot. So probably we'll have to wait for a few more years till we can get a humanoid assistant for our houses.
Yeah, exactly. I mean, if you look at like the current cost, is quite high, given that like the components are very expensive. There's many actuators needed for a very a functional humanoid to perform multiple tasks. So that's making humanoid, I think, at a stage that we need to really scale. Really, we need a scale to solve a lot of applications. When I think like even like I think like with some startup, they're being very intelligent that can make the humanoid at a level with their supply chain solutions. It's pretty much affordable. If you look at the basic model of those humanoid, it range from like $20,000 to $50,000. That's like the price of a car. So if you think about in the future, if you have a humanoid that can do many things for you with the price of a car, that like I think like there's demand is going to be huge. So Morgan Stanley actually projected there could be 1 billion unit of humanoid. That's up to $5 trillion total addressable market by 2050 for humanoid. And we think like at the first stage, right, like mostly those dangerous places, those like working environment not suitable for human, but requires the human shape and can perform multiple tasks is quite like the low-hanging fruits. So warehouses, factories, or even like I think a lot of like even people I think like imagine battlefield, a lot of military use. And then I think those are going to be kind of like the first wave of adoption. Then a lot of like because the aging population, I think there's demand for like nursing home, hospitals, like medical and healthcare use case. Is also, I think a lot of companies are doing that. Then I think finally you're gonna come to our home, because I mean labor like I'm living in New York like right now, so labor cost is quite high for any like even nanny or just like helpers at home. So I have a newborn baby, so I would kind of like totally feel that we need more help, even just like cook at home or like take out the trash, or so we have more time to really spend with your kid, your baby. So I think that can be happening like in the future as well.
Yeah, that would be so cool. But probably, yeah, we'll have to wait for some time. So let's talk a little bit more about the ETF, particularly tell us how KIOD selects and weights companies for inclusion in the ETF. And I'm looking at the portfolio. It has a lot of international exposure. In fact, China is almost 32% of the portfolio, same as the US. And then Japan is a little more than 10%, which makes sense because China is a leader in humanoids, per my understanding. But tell us more about the strategy and selection process.
Sure. Yeah. So when we think about a humanoid, we believe, well, hundreds of companies will eventually compete to become the leading integrators and the brain of humanoid, right? Everyone's competing to be the operating system, just like Apple. But we believe the first wave of investment opportunity actually lies in the body or the component of the humanoid. As like we just talked about it, right? Like those components, those actuators, very expensive, and we need to really scale those capability, those capacity to make humanoid affordable. So we believe those are really like the shovel makers in the humanoid gold rush. So our investment strategy really captured this space, focused on 50 companies that's equal weighted across 6 categories. There's humanoid integrators. There's a humanoid brain company called providing the intelligence technologies, but most importantly is on the body, the components, including actuation system, mechanical system, sensing and perceptions, and critical materials. So those ecosystem approach allows, I think, investor to have a diversified approach to this early opportunity. So KIOD actually tracks index provided by Mercube, called Mercube Global Humanoid and Body Intelligence Index. The index is really uses rule-based methodology to select the top companies, top ranked companies that either involved in the humanoid business or is a supplier for the humanoid companies. So those are 2 key factors to determine if the company should be included in the portfolio. So that in that way, we think we offer a solution for global investors to really have a global diversified approach to investing into humanoid opportunities. As you mentioned, we are pretty diversified in the geographic. We have US, we have China, with Japan, we have German. You think about like US probably is more leading towards the technology part, the intelligence, the brain, where the China is really good at manufacturing. There's a lot of component companies, same as Japan and German, both really good at those precision control machines and those manufacturing related or sensor related technologies. Yeah, so this is really a global demand across the world. Every country gonna need humanoid to solve this labor shortage, and we think there's opportunities that lies in many countries, including like US, China, Japan, and Germany, and many other countries as well.
Right. So I looked at the portfolio and I do see NVIDIA there because Yeah, as we talked about, Jensen being focused on physical AI, but there are many other holdings which our listeners may not be familiar with. I see Jebel, I see Melexis, Schaefer, Infineon. So could you talk about some of these top holdings which are really, really innovative and which are doing some innovative work in this space?
Sure. If you think about the holdings, you can break down the holdings into like three parts. One is the brain, right? The technology companies. Of course, you have NVIDIA, but you have a lot of more technology companies that's really needed for humanoid, including the sensing technology. As you said, Melexis is one of the important like sensing technology provider for the humanoid navigation. And also, I think like the integrators itself, in the future, you're gonna have more and more. I think like integrators gonna go public. At this stage, a lot of integrators actually still in the private stage. Definitely you have Tesla, like that's gonna build a ton, like Optimus, that's public. In South Korea, we hold Rainbow Robotics as the integrator in humanoid. There's a UBTech in Hong Kong, and in China there's some like private players in the space, like including Unitree, is one of the top performing humanoid maker. We actually we partner with this firm called RoboStore, based in Long Island. That like they are distributor of Unitree, so we bring one of the Unitree model to the NASDAQ bear rating for KIOD. It became the first humanoid actually ringing the bell for ETF. So that's kind of like an interesting moment I want to share. Then there's a lot of, excuse me, there's a lot of body components companies actually in KIOD. I think one of the most important component is the harmonic drive. So we do hold the two biggest harmonic drive companies, including the harmonic drive system in Japan and the leader harmonic drive system in China, taking the majority of the harmonic drive system. Then there's a lot of actually like actuator manufacturing company. There's a lot of bearings, screws, those components. Now I think like because the humanoid is so expensive, as I mentioned, those component companies are going to be the first wave of the opportunity. And I forgot to mention, critical materials is another key component for humanoid. For them, MP materials, we're early investor in MP materials in KIOD. As the CEO mentioned, that humanoid probably going to require 2 to 3x more rare earth than electric vehicle. So rare earth is actually a very critical material for the humanoid manufacturing going forward. I think that's strategic for the United States and other countries as well. So that's why we had position in the MT materials, and that's really performing well recently. So yeah, this is kind of like an ecosystem across the brain, the body, integrators, materials that's going to power the future growth of humanoid. And we think that's the best approach at this stage, at this early stage for investor to invest in this humanoid opportunity.
So we know that there are other robotics focused ETFs available in the market. There are many robotics and AI ETFs. And now there is an ETF, which is kind of your direct competitor, which focuses exclusively on humanoid robots. So tell us, how is your ETF different from other options available to investors?
Yeah, for sure. I think most robotics ETF was launched like quite a long time ago. And back then, the robotics and opportunity is mostly focused on the robotic arms or like industrial focused robotics. Industrial automation has been a trend, I think, happening about like even 40, 40 years ago, right? So that process has been a while. And the automation of factory, I think the penetration of the automation in factories quite well, so quite high. So that means the industrial automation and the traditional robotic arm, the growth is slowing down. And we are taking the approach a very different angle. We are focused on exclusively on the humanoid side. As I mentioned, the company that's related to the manufacturing or the supply chain of humanoid to really solve the next generation of automation. To really have, this is cover like the last mile of automation for a lot of factories, but it's beyond the factories, right? Like going to the nursing home, going to our home potentially. So this is a totally different set of opportunity, and it has a huge overlap actually, or just like has like a certain relationship with the artificial intelligence, because it's thanks to AI, thanks to the way of large language model training, that humanoid actually can have a intelligence that's getting better every day. So that's the scaling law, I think, happening previously on digital world. Now the scaling law is going to happen in the physical world. So our ETF, if you think about like the traditional like robotic ETF, you don't actually have those exposure towards the humanoid side. And if you think about the AI ETF, most AI ETF, as we do have an AI ETF, focused on the company that's really happening in the digital world. That is really from the hardware in the chip and database to powering the foundational model, computation, training, generation, and to the AI applications across the enterprise and consumer side. So that's a total different portfolio. If you think about like the overlap between KIOD and our AI ETF, AGIX, there's not much. There's very little, maybe just like 2% to 4% overlap. So that means like the AI and the humanoid actually represent a whole different set of opportunities for global investors.
Excellent. Congratulations on the launch, and thank you so much for joining us today.
Thank you for having me.
I hope you enjoyed learning about this exciting area and both these ETFs. Obviously, these two ETFs are quite different from each other. HUMN is actively managed, and it has a concentrated portfolio with Tesla and NVIDIA accounting for about 21% of the portfolio. In contrast, KIOD follows an index-based strategy, and it equally weights its holdings across the robotics value chain. But it has a lot of exposure to smaller niche companies that we do not know a lot about currently. And this approach offers broad diversification, but active management makes HUMN more nimble. And that advantage could be crucial in a rapidly evolving and exponentially improving technology like this one. In my view, it is a little early to invest in this theme, so I'd be watching both these ETFs closely and how they perform over the next few months, and then decide whether it's worth investing. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcasts. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.